Hello everyone, welcome back to my YouTube channel. In the last class, we studied about bill of exchange and promissory note, right? So in today's class, we are going to learn the accounting treatment of bill of exchange and the journal entries passed under bill of exchange. So let's recall what is bill of exchange. Bill of exchange, it means what? It is a written order by the drawer to the drawee to pay a certain amount to the payee on a specific date. Clear? Or it is a written order by the drawer to the drawee to pay a certain amount on a specific date if there is no payee. In that case, clear? If there is a payee, then the drawee has to pay the certain amount to the payee on a specific date. Clear? This is what bill of exchange. So let's see the accounting treatment of bill of exchange. Here in bill of exchange, drawer, it means who is the drawer? Who draws the bill, right? Means usually the seller or creditor. The drawer, he is also called as seller or creditor, because a drawer has to receive money in the future, so he is a creditor. So remember this. These are very important while passing the journal entries. Clear? See, drawer means who? The seller or creditor, because he has to receive money in the future. So he is a creditor. Clear? And next one is drawee. Drawee means who accepts the bill. Drawer means who draws the bill. Drawee means who accepts the bill and pay the amount on a specific date. Means usually the buyer or debtor. Means drawee has to pay money in the future. So drawee is a debtor. Clear? Creditor means the drawer has to receive the money in the future. So he is called as a creditor. And the drawee means who has to pay money in the future. Pay money in the future. So drawee is a debtor or the buyer. Clear? So these terms are clear, right? Now see, when a bill of exchange is made, the seller means who? Drawer, writes the bill and gives it to the buyer, means drawee, right? To sign and accept. So for the seller means who draws the bill, means drawer, it becomes a bills receivable. Clear? For drawer, it becomes a bills receivable because he will receives the money in the future. So to drawee, what happens? It becomes a bills payable. Right? So see, after the buyer accepts it and gives it back, the seller keeps it as proof that he will get the money on the due date. So for buyer who accepts the bill, it becomes bills payable, right? Means because he has to pay money in the future. So these four terms you have to remember while passing the journal entries. First one is drawer means creditor, because he is going to receive the money in the future, or seller. And drawee means debtor or the buyer who accepts the bill and who has to pay money in the future. And the drawer, he becomes a bills receivable because he will receive the money in the future. And drawee, he becomes bills payable who has to pay money in the future. Clear? So these four terms are very important when passing the journal entries under bill of exchange. So let's see the journal entries one by one. First one, when goods are sold on credit. When goods are sold on credit. Clear? So first entry means in the books of creditor or drawer or seller. Means he sells the goods, right, on credit. So what is the journal entry? Debtors account debit to sales account. Debtors account debtor to sales account, being goods sold on credit. Debtors account means that is the personal account. Debit the receiver when goods are sold on credit. Who is the receiver? Debtor. Debtor means who? drawee, see here, drawee, debtor, he is going to receive the goods. So debtor's account debtor, debit the receiver to sales account, credit all incomes and gains. So this is the nominal account, sales account, that is a nominal account. Clear? So being goods sold on credit. So in the books of creditor or drawer, when goods are sold on credit, the journal entry is debtor's account debtor to sales account. Clear? And next one, so in the books of drawee or buyer or debtor, what is the journal entry? See, when drawer sells the goods on credit, drawee purchase the goods on credit, right? So the journal entry is purchases account debtor to creditors account. Purchases account debtor, debit all expenses and losses to creditors account. Credit the giver. Who is the giver? Creditor or the drawer, right? To creditor's account. So being goods purchased on credit. So till here it is clear, right? So when goods are sold on credit in the books of drawer, the journal entry is debtors. Who is the receiver? Debtor, right? Account debtor. Debtor means drawee to sales account. When drawer sells the goods, drawee purchase the goods on credit. So the journal entry is purchases account debtor to creditors account. Credit the giver. So creditor means drawer. He is the giver of goods. Clear? So next one, second one is in the books of creditor, drawer or seller. So the situation is when the bill is drawn and accepted. First what happens? Drawer sold the goods. Now what he will do? He drawn the bill and accepted by whom? Accepted by the drawee. So when the bill is drawn and accepted, so the journal entry in the books of drawer or creditor or seller, bills receivable account debtor to debtor's account. Bills receivable. Clear? To debtor's account. Bills receivable, debit, what comes in? Real account, that is right. To debtor's account. Bill is drawn and accepted. Means debtor's account means credit the giver. This is the personal account. That is bill is drawn and accepted by the drawee and give back to the drawer. So who will give the bill to drawer? Debtor means the drawee. So the journal entry is bills receivable, debit what comes in and to debtor's account. Credit the giver. Clear? And in the books of drawee or buyer or debtor, when the bill is accepted, so the journal entry is creditor's account debtor to bills payable account, right? Bills payable account, credit the giver. Creditor's account debtor to bills payable account, debit the receiver. Who is the receiver? Creditor means drawer. So in the books of drawee, creditors account debtor to bills payable account. Clear? So first when the goods are sold on credit, the drawer sold the goods on credit and the drawee purchases the goods on credit. And second one, the drawer after selling of goods on credit, he draws the bill and that is accepted by and give back by whom? That is drawee to the drawer. Clear? Till here this is clear, right? So now next third situation is when the bill is honored. So when the bill is honored, it means what? It means drawee pays the full amount written on the bill on or before the due date to the drawer. The bill is honored means the drawee pays the full amount that is mentioned in the bill on or before the due date. On or before the due date to the drawer. Clear? So, when the drawee pays the full amount, What is the journal entry in the books of drawer or seller or creditor? So the journal entry is cash or bank account. Debit what comes in? Cash to the drawer. Cash comes to the drawer. To bills receivable account. Credit what goes out? This is the real account. Clear? To bills receivable account. So being bill honored on due date. Clear? Is it right? In this way you have to understand these journal entries. Otherwise it becomes very difficult. Clear? So now in the books of drawee, what happens? What is the journal entry? Drawee pays the full amount. So bills payable account. Bills payable account. That is debit the receiver to cash or bank account. Credit what goes out? Cash is the real account. Credit what goes out? Means drawee he is going to pay the money to the drawer. Cash goes out, right? So being bill paid on due date. The bill is honored means the drawee pays the full amount written on the bill on or before the due date to the drawer. So in the first situation, what happens? Drawer sold the goods and drawee purchases the goods on credit. And after that, drawer draws the bill and that is accepted by the drawee. And in the third case, the drawee pays the full amount. Drawee pays the full amount written on the bill on or before the due date to the drawer. So these are the journal entries in the books of drawer and in the books of drawee. Clear? Till here it is clear, right? And so next situation is journal entries for discounting the bill. It means what? Discounting of bill. In the last class, I explained about discounting of bill and endorsement of bill, right? So discounting of bill means the drawer means the seller needs money before the due date. He needs money before the due date. Drawer means the seller of goods on credit. So what he will do? He can take the bill to the bank and get it discounted. Get it discounted. Clear? So when the drawer needs money before the due date, he can take the bill to the bank and get it discounted. Means the bank gives him the bill amount, but after deducting some interest or charges. Right? That is called as discount. The bank gives the full amount but after deducting some interest. So the drawer receives money early but with discount. And the bank will collect the full amount from the drawee on the due date. So this term discounting of bill I clearly explained in my last video. Please watch that class first and proceed with this one. Clear? So what is the journal entry for discounting of bill? So at the time of discounting, in the books of drawer, seller or creditor, bank's account debtor, discount account debtor to bills receivable account. Bank account, that is the real account. Debit what comes in? Money received from the bank. And discount account, that is the nominal account, right? So what is the rule? Debit all expenses and losses. So discount, it is an expense, right? And so to bills receivable account. Credit what goes out means bill that is handed over to the bank. So in the books of drawer, bank account debtor means he is going to receive the money from the bank because due to any emergency he needs the money before the due date. So what he will do? He can take the bill to the bank and get it discounted, but he will not get full amount. Bank will deduct some interest or charges, that is called as discount. And after that bank will collect the full amount from the drawee on the due date. Clear? So this is the journal entry. Bank account debtor, discount account debtor to bills receivable account in the books of drawer, being bill discounted with the bank. Now the question is, what is the journal entry in the books of drawee or buyer or debtor? Because drawee is going to pay the money on or before the due date only. He will not give the money before the due date. Then at that case, no journal entry that is made at the time of discounting. Clear? Because the drawee still owes the full amount, but now he will pay it to the bank instead of drawer on the due date. Clear? Now this drawee, he will not pay the full amount to the drawer because the drawer he already take the bill to the bank and get it discounted, right? And he already received the money from the bank. Who? Drawer. Now drawee, again he will not pay the amount to the drawer. That is why here there is no journal entry. He will pay it to the bank instead of the drawer on the due date. Means when the drawer discounts the bill with the bank, it means he is taking cash from the bank before the due date. The drawee means the buyer of the goods, the one who accepted the bill, is not involved in this process of discounting. So there is no journal entry in the books of drawee, buyer or debtor. Clear? So I hope this is clear to you all. This is when at the time of discounting. Now at the time of maturity, on the date of maturity, so what is the journal entry means? The drawee honors the bill. There is no entry in the books of drawer. There is no entry in the books of drawer. Why? It's easy because the bank receives the payment directly from the drawee. Clear? On the date of maturity, the drawer, he is not going to receive any amount because he already received the amount from the bank. And drawee, he is pay the amount to the bank. See, because the bank receives the payment directly from the drawee. Clear? Means here the drawer's responsibility that ends when he discounted the bill. So on the date of maturity, there is no journal entry in the books of drawer. Clear? And in the books of drawee means the buyer. Same, that is bills payable account debtor to bank account. That is cash goes out. So being bill paid on maturity. Clear? Bills payable account debtor to bank account. Clear? Means the liability is cancelled and cash goes out to make the payment. Clear? So these are the journal entries involved in the case of discounting of bill at the time of discounting and on the date of maturity. Clear? Now next situation is, see, journal entries for endorsement of bill. Journal entries for endorsement of bill. 1 minute. Yeah. See, endorsement, it means what? So this term also I have clearly explained in my last class. Clear? So it means when the drawer transfers a bill received from the drawee to a third party. To settle a debt. This process is called as endorsement of bill. Means the drawer uses the bill to pay someone else. Clear? Clear? Now first case is endorsing the bill. So in the books of drawer or creditor or seller, what is the journal entry? Creditor's account debtor to bills receivable account, being bill endorsed to creditor. Creditor means the debit the receiver, right? So creditor's account debtor to bills receivable account. And in the books of drawee or debtor or buyer, again here the drawee is not involved in the endorsement process. So there is no journal entry, means only the drawer and the endorsee are affected. Therefore in the books of drawee, there is no journal entry at the time of endorsement of the bill. Clear? Now next one is, first one, First situation is endorsing the bill, and second one is on maturity of the bill. So this is very easy. On maturity of the bill, in the books of drawer or seller or creditor, there is no entry, right? Because there is no entry, because once the bill is endorsed, the drawer is no longer responsible. The endorsee receives the payment directly from the drawee. Directly from the drawee, there is no entry. And in the books of drawee or buyer or debtor, same entry. On the date of maturity, that is bills payable account debtor to bank account, that is being bill paid on maturity. Clear? Now discounting of bill is over, endorsement of bill is over. Now last situation is when the bill is retained by the drawer with him and sent to bank for collection and a few days before maturity. It means what? It means when the drawer, means seller of the goods, keeps the bill with him, means he does not endorse it or discount it. Clear? Does not endorse it or discount it, and then sends it to the bank for collection a few days before maturity. He sends it to the bank for collection few days before maturity, means he is not going to receives the money directly from the drawee. He will send it to the bank for collection few days before maturity. So the bank will collect the amount from the drawee on the due date and credit to the drawer's account. Credit to the drawer's account. Clear? That is what, when the bill is retained by the drawer, means he does not want to endorse it or discount it. Clear? Here don't get confused. This is not discounting. Clear? This is not discounting. He sends it to the bank for collection few days before maturity, means he will only retain, see when the bill is retained by the drawer only. Clear? He sends to the bank for collection few days before maturity. So the bank will collect the amount from the drawee on the due date and bank will credit to the drawer's account. Means the drawer does not want to directly receives the amount from the drawee. Drawee will directly pay the amounts to the bank. Clear? Now let's see the journal entry in the books of drawer, that is sending the bill for collection. Sending the bill for collection. So first one is bill sent for collection account debtor to bills receivable account. Bills receivable means bills receivable that is no longer with the drawer. That is bill sent for collection, we need to debit to bills receivable account. Being bill sent to bank for collection, this is bills receivable, we need to credit because that is no longer with the drawer. And a temporary account, that is bill sent for collection account, that is need to be opened. In this case, this is not discounting. Clear? Just the drawer himself retained the bill and he will send to the bank for collection few days before the maturity. Clear? Here the bank, it will not give the amount after deducting some amount, means this is not discounting. Here the drawee, he will only pay the amount to the bank and the bank will credit it to the drawer's account. Clear? And in the books of drawee, there is no entry, right? Means this action again, that is done only by the drawer. The drawee is not involved in this process. He will pay the amount only on the due date. Clear? Now second one, when the bill is honored on maturity. Now in the books of drawer or seller or creditor, what is the journal entry? Bank account debtor to bill sent for collection account. Bank account. Bank balance here increases, right? So you need to debit it. To bill sent for collection means here the temporary account, that one we need to close now. See this one here. bill sent for collection account in the books of drawer. Sending the bill. Now when the bill is honored on maturity, we need to close this temporary account. So we need to credit it. That is to bill sent for collection account. Being bill collected by the bank and amount received. Now in the books of drawee, buyer or debtor, what is the journal entry? Same. Bills payable account debtor to bank account. That is being bill paid on maturity. Clear? Easy, right? So these all are the journal entries we need to pass under bill of exchange. First situation is the bill is honored. Means the drawee is going to pay the amount on or before the due date of maturity. And at the time of discounting, means the drawer, he needs the money before the due date, when then he can take the bill to the bank and get it discounted. And at the time of endorsement, means the drawer transfers a bill received from the drawee to a third party to settle a debt. Clear? And next one, the bill that is retained by the drawer and sent to the bank for collection few days before maturity. Here you should be very careful. This is not endorsement, this is not discounting. Clear? So I hope these journal entries are clear to you all. If you have any doubts in these journal entries, please leave a comment. And in the upcoming class, we are going to solve a practical problem using these journal entries. Clear? Thank you.